For a while, the narrative was that when interest rates finally rose, financials would benefit. That hasn't proven true, but one company may buck the weakness some financials have been seeing recently. The COVID-related downturn saw several energy companies sink into bankruptcy, but we saw a big bullish bet in one of the names that emerged from it. Will it stay afloat this time? Healthcare can be a defensive sector in all types of markets, and we saw bullish flow in a primary care operator. And finally, Goldman Sachs added Live Nation to their large cap growth insights, and we saw large call volume in it. But is this a place to buy or possibly sell? We'll discuss. Hello, everybody, and welcome. I'm really pleased that joining us today is Carter Braxton-Worth, the Chartmaster. Great to have him back. We did a number of web extras, many of you will remember, back during the Olympics, and I'm really pleased that he's going to be joining us here today. So we're going to be talking about 4 different stocks that saw some significant and unusual options volume today. The first of these is ticker ICE, Intercontinental Exchange. Now, this name saw some significant bullish activity. Specifically, we saw a purchase of the SEP 100 calls. And, you know, Carter, when I think of this stock, this is a company that I think of as potentially being a little bit more immune. A lot of folks thought that rising interest rates would help net interest margins. Of course, you need to have, you have to actually issue loans for that to be a benefit. If you're an asset manager, declining asset prices hurt your fees. But their business isn't really tied to either of those things. What are you seeing in the charts for this one?
Well, basically, if you had to summarize it, I would say this is a sell-off to a level of support. There are 3 charts. The first one, just to show you, what is it? It's a 34.5% decline. Now, the current action, the balance of the last 4, 5, 6 sessions, you'll see on the next chart, it's the exact same time frame. We've actually started to move above the downtrend, in effect, since that peak up at 140. And then why is it a sell-off to a level of support? The final chart, the long-term chart, really depicts this. Now, this is going back basically as far back as data, and every single time, while it's only 4 times, still, it has bounced when it's come down to trend. So it's an important sell-off to a trend line, and it has bounced to the penny off that line.
You know, it's also interesting when we take a look at this. This company is actually trading pretty cheap. It's probably trading around 18 times full year earnings right now, probably scheduled to grow, you know, high single digits year on year for next year as well. So from a fundamental standpoint, that company also looks pretty solid, and their business is relatively invulnerable compared to some of the things that would affect other companies we might conventionally think of in the financial sector. Another name that saw a really big trade today was Valaris, ticker VAL. This saw a purchase of 12,000 August 50/60 call spreads. Now, this is an offshore driller. This is a company that gets about 45% of their revenues from the North Sea. People who are following this news probably know that the G7 is meeting, and one of the big issues, of course, for Europe right now is energy independence. Something else a lot of folks may or may not know, during the COVID pandemic, a lot of energy companies really got hurt, and several filed for bankruptcy, including this one. In fact, several other drillers did as well. Carter, I know you mentioned right before we came on that also some of the coal space saw the same thing. Noble was another company that filed for bankruptcy in all of this, Seadrill and Diamond Offshore. What are you thinking after this pullback that we've seen? Valaris had hit some post-bankruptcy highs of just under $62 a share not that long ago. It gave seemingly all of that big rally back, but someone's playing that it might actually rebound back to it.
Yes, a dip, a drawdown, a sell-off, or whatever nomenclature. One could call it a crash, but guess what? And you can see it here without any lines or arrows drawn. It's clearly an uptrend, and uptrends are by definition punctuated, defined by counter trend moves, sell-offs. And now, is this counter trend sort of to a level that matters? Well, first, let's look at its in context of the preceding. It's 33, almost 34%. There have been 2 others greater than 20. You see them there in the summer of 2021 and then in the autumn of 2021. But more importantly, where is the sell-off to? It's to trend. Look at the third and final chart. It has come down to the penny. Does it have to bounce here? No. Has it bounced? Yes.
It's also interesting. One of the things that a lot of people would point to is they would say, well, look, Rig was the one company that didn't actually file for bankruptcy and is operating, a very strong fleet of rigs. The issue is that the companies didn't file for bankruptcy are still carrying all that debt. The ones that did have restructured, so it's a different class of owners now, but they aren't carrying that same debt burden. That could obviously help them from an operating perspective going forward, since they aren't going to be quite as debt encumbered. Another name that saw some significant bullish activity today was a primary care operator that specializes in providing services directly to Medicare eligible patients. This is a company called Oak Street Health, ticker OSH. This one saw some bullish activity, and you were mentioning to me, Carter, that you think this may have some further upside.
Well, the question is, when you bottom fish, at least you want more often some signs that it's bottoming. And so what do we know? How bad a sell-off is that? That is a 79% sell-off from its highs just below 70 down to the lows of the past 3 months. But if you look at the next chart, what's starting to happen, it's very clear. It continues to not make a new low. So the sequence is changing. If you're in an uninterrupted downtrend, an Enron, for instance, while you do get counter trends, Enron had 3 or 4, 5 even of 20% or more before ultimately going to zero. This one is starting to show us that it's actually not going to zero, if you will. It's starting to base and bottom. And the final chart just put in a trend line. 1, we've broken above the trend line. 2, it's been basing and stabilizing for several months and has all the elements of an early stage bearish to bullish reversal.
And you used some important words there, early stage being one of them. Oak Street Health, just for those who don't know, is basically a growth story. This is a company that had negative earnings and negative free cash flow and is, basically a growth story. And as we all know, it was really the growth stocks that got hardest hit most recently. But at some point, as people are trying to look for opportunities on the long side, some of those have been beaten up very badly, and it's understandable why you might begin to look at that one. And finally, one of the names I was taking a look at was Live Nation. And what's interesting here is that this is a stock that obviously has fallen back quite significantly. When I look at this, it's kind of hard for me to tell. It sort of looks like it's just bouncing along the bottom here. This was a name that was added to Goldman's Global Insights large cap list, I think today, or it was maybe tail end of last week. And we did see some bullish activity in this one back a couple months ago, April, and then in May. Most of that call activity was not profitable. So most of those trades were entered into probably about $6.30 a contract. All of those July calls were exited today, probably at less than $2. But we did see them roll out to August. Do you think there's much hope for them here, or is this one bound to sort of languish as it has been?
Yes, I think that's exactly the right word, languishing, meaning it's heavy. It's not participating in the bounce that we've seen in so many other areas of the market, be it only a few days, but a bounce nonetheless. And here, that first chart, if a bearish to bullish reversal, something that's been a long and protracted downtrend that starts to base and bottom, the opposite, the reciprocal, is a bullish to bearish reversal. This stock's gone from 20 to 120. And now let's draw some lines. The next chart depicts quite clearly, it has the elements of a topping out formation. Put in a trend line, and we know what we have here. In the final iteration, we have a stock that's broken trend, and that has started to basically roll over. So stocks in great uptrends at some point roll. They go from bull to bear, just as stocks that don't go out of business ultimately turn from bear to bull.
Got it. Carter, it's really great to have you back for these web extras. I'm hoping we're going to be doing a lot more of these in the future. Everybody, please stay tuned for that. If you like what you're seeing, like, subscribe. Be sure to comment. If you send us questions, we'll try to answer them, and we'll see you in the next one.
You guys there?